about stocks this week, a roller coaster ride for the markets as the Sensex dips below 18,000 and recovers in the second half of the week. I'll tell you what your investment strategy should be. The free falling rupee makes an all-time low. We'll find out if it's headed towards 70 to the dollar, and we discuss portfolio fundamentals with Prakash Devan. Welcome to All About Stocks. Thank you for tuning in. This is a show specifically meant for long-term retail investors in our stock market. Now, I know there's been a bloodbath in the Lal Street this week. We saw the Sensex dip below 18,000, the Nifty dip below 5,300. It did recover though in the second half of the week. Now, we're going to tell you over the next half hour why there's no need to panic if you're a long-term investor. We'll also tell you which stocks and sectors you can focus on and still make money in the long term, which means there is an opportunity for you to profit from what's happening right now. We'll take a close look at metal stocks and bank stocks and find the best picks for you. We'll also answer the questions you sent in during the week. Remember, there's an email ID at the bottom of your screen where you can send in any question you have about any of your stocks. Before we go any further, let me bring in Ajay to give us an update on the markets and the rupee. Ajay, take us through what happened this week.
Well, this week was all about recovery. Not only the Nifty, which recovered from a low of 52.68 or thereabouts, even the rupee is forging some kind of a recovery thanks to all the measures which have been announced so far. Yields also have softened after making highs of over 9%, again due to a lot of measures announced from the RBI side. Global cues are quite supportive, and that's why we have come back almost to the 54.50, 54.75 mark yet again. FOMC meet was the big factor which the market was watching out for this time round, and this week it has gone by quite peacefully. In fact, the global markets faced a smart recovery after the FOMC did not come out with a big surprise on either side. It was all on the expected lines. Taper is on track. It may actually start in September. Apart from that, we also saw one negative factor play on the markets, and despite that, market was staging a recovery, which was the FI data. FI flows for the last several weeks have been on the selling side, and even that is being absorbed by the market, which is something to take heart from. Traders believe that this short covering rally, which is playing out not only in emerging markets like Brazil, Russia, India, China, but even in the developed markets, could take our own Nifty to 5,500 plus kind of levels by next week. However, one needs to take into account the upcoming expiry of this particular series. Apart from that, a lot of macro data would be playing in on the mind of the market, like Q1 GDP data. A lot of industrial productivity data would also be coming by. So expect volatility, but trade with the positive bias is the message coming from the street right now.
All right, Ajay, thank you for that update. Joining us today in the studio is Prakash Devan, the director at Altamount Capital. Prakash, thank you so much for joining us. I think it would be an understatement to call this confusing times. But what I want to understand from you is on Thursday and on Friday, we saw a bit of a recovery. We saw the Nifty gain back about 100 points. Tell us, is this really a recovery? Is it short covering? What is going to happen on Monday morning? Is the volatility behind us? How much worse could we possibly get from here?
No, I don't think there's any way to do away with volatility. But Thursday and Friday very clearly was a reaction to an anticipation of positive news flow and policy changes from the government side to particularly address the rupee debacle. See, the whole thing is centered around how the rupee behaves, and every time the dollar firms up for its own reasons, we start kind of weakening, or the rupee weakens further because of our own making. The markets do not take all this very positively. Particularly for foreign investors, it's a big blow. It eats into their capital every time the rupee depreciates by whatever percentage. So more than us, where we invest in rupees and get it back in rupees, for them it's a different equation. And that's one of the reasons why the markets have been extremely choppy, because nobody's been able to anticipate the rupees fall with such an accelerated pace.
There's other interesting reports and information that's coming out in the media for retail investors, saying that you can take advantage of where the rupee is right now by buying into IT, buying into stocks that export a lot. Or you can, you can spare yourself the pain by not investing in companies that are, have a lot of overseas borrowing and are paying a lot of interest in dollar terms. Is that something you'd recommend as well? Is there a list of companies that we should be avoiding at this point?
Yeah, I mean, to a large extent, you should not get into things which have a very direct correlation with the forex movement, because you would be subject to more volatility, not just equity volatility, but the forex volatility also compounds things. So it's best to stay away from these kind of companies, and you would rather be invested in companies which are fundamentally part of the core sector of the economy. And yes, we are going through a slowdown, but the best time to invest
So when you say core sector of the economy, could you give us
yes, I mean, things like automobiles, things like steel, metals, things like engineering. These are even to a large extent telecom. I mean, except for Bharti, which has a huge overhang of forex borrowings, I don't think the telecom business is going away anywhere. So these are businesses that will be always around, they'll be profitable. What people need to realize is your investment needs to be
What about all of the trouble that the telecom sector has had over the last couple of years? We've been talking about the fact that we should avoid telecom because...
Yeah, but I mean, there are always good companies within that also. So out of the listed space, if Bharti has a forex overhang and Arcom has its share of issues, Idea stands out as a clear winner, and you've seen Idea getting rewarded amply by investors. I mean, institutional investors have increased their stakes to such a large extent, and the rating is completely different.
Okay, I'm going to call you out on one more thing. The fact that in the past you've told us that tied to the economy, first and foremost, is a sector called banking. You're not mentioning banking this time. Is it because banking is something we should be focused on?
No, in fact, banking has been the biggest victim of our structural, issues that we've had, or errors of judgment, as I would call it, on the interest rate side. If you look at a single tweak by the RBI on treating the bonds which are in the hold to maturity portfolio, and the losses there could be because of interest rate moves, they've kept those things out of any kind of a capital loss, and the balance sheet starts looking very different. So at the end of the day, you need to realize that banking is extremely regulatory sensitive, and if it's regulation sensitive, you need to make sure that the environment is benign for banks. And now I feel some of the mid-cap PSU banks are extremely undervalued. I mean, they're very good. They grow at a decent pace. You look at a bank like Syndicate, Oriental Bank or Commerce.
But there's that concern of NPAs from all of those PSU banks, isn't it?
Generically, yes. But if you look at specific balance sheets, they have come up with very good numbers without increasing. These are extremely conservative banks, and they don't lend to anybody they find doubtful. In fact, they have compromised on growth, unlike the likes of Axis or Yes Bank, which have still gone ahead and grown. And probably, not bothered so much about, or I wouldn't say bothered, but not so concerned about the growing NPAs, whereas some of the conservative PSU banks I don't think are bad at all.
So let's try and wrap this up very clearly for our viewers. If I were to buy a stock right now in this market to hold for the next 3 or 4 years, give me a checklist that I can use to make sure that this is a good stock, it falls into the categories that you mentioned up till now. Is there a checklist you can give us?
Yes, I mean, I would look at, all weather sectors, so to speak. From that perspective, from the core sector, it would be oil and gas. So you would look at a Reliance. You would look at Coal India from the energy side. You look at maybe, from the automobile side, I always liked M&M, so I would still go ahead with it. Maybe a two-wheeler player like Hero MotoCorp also is kind of making to the grade. From the defensive side, you'd always like a pharma player. So it could be Dr. Reddy's, it could be Sun Pharma, Lupin, Cipla, I mean, lots of them. From the FMCG side, it's not going to go out of fashion. Staples will always be in vogue. You can continue buying ITC, but at lower levels. So it's all about getting into the right companies with great management, good business models. I don't think it would go wrong.
Right. And of course, the market is testing our faith at this point as long-term investors. Okay, we have a couple of questions from our viewers that have come in. Rajiv has written in, Prakash. He says he has 100 shares of Hindalco, which he bought at 108 rupees. He wants to know if he should hold on to that stock. The stock ended the week at 103, so he's on par, really. We also heard that Kumar Birla plans to raise his stake in Hindalco from 5%, where it is currently, to 37%. And that's normally considered, a sort of a good sign for a company if the promoter is willing to increase his stake. In fact, I'm going to ask Ajay to come in and give us an update on everything that happened in the metal space, specifically with steel. We saw a lot of movement this week. Ajay.
Well, Faye, that's correct. Quite surprisingly, one very under-owned sector, the metal sector, has been outperforming the market right now. A lot of upgrades have been pouring in. JP Morgan, Nomura, all of them have upgraded the sector. It was under-owned and technically in oversold territory according to strategists, and hence have come back and is leading the market in a certain way. We've also seen a very positive comments coming in some of the large conglomerate heads like Mr. Birla indicating that they aim to raise the promoter stake in Hindalco. Tata Steel has been rallying ever since ArcelorMittal has hiked prices in Europe, and there is a general belief. Platts, of course, came out with a note saying that European metal sector is witnessing a lot of turnaround. So all these combination of factors led to a lot of long positions, delivery-based buying in the metal sector, and dealers and the analysts believe that the valuations are extremely compressed right now, and the way trading positions are being set up in this particular sector, we may be in for a little more upside in the next coming days.
All right, Ajay. Prakash, let's talk about Hindalco first. Now, for someone like Rajiv who's holding on to that stock, what can we read into the fact that the promoters have now decided to increase their share?
I think it's extremely positive. I mean, nobody else knows the business better than the owners and the promoters, and if they evince this kind of a conviction, it's definitely and it's a serious group. They've put their money where their mouth is. It's not like just talking about it and changing their versions. But I think it's apart from that, you need to realize if the US picks up, Hindalco has an arm out there called Novelis, which is extremely sensitive. It's a part of the core sector there. So if the US economy picks up, Novelis will turn around, and if that happens, Hindalco will also benefit.
So for someone like Rajiv who got in at 108, where do you think it might go, and how long should he hold on?
135, 137. I mean, that's the fair value even today. So it's actually undervalued. I mean, I would believe it could go to 160 kind of levels, which is closer to his book value, but he could definitely hold and make some decent money.
All right, so hold on to that stock. We have another question from Naveen who's written in 100 shares of Tata Steel for at 249 rupees. He wants to know if he should hold on to that stock. Tata Steel ended the week at 282. It hit a 1-month high. The stock surged nearly 32% over the last fortnight. There were a lot of investors that were giving up on Tata Steel for a while. What happened there? Where did the turnaround come from?
I think it's essentially the fact that Tata Steel has scale, which can dramatically alter its fortunes, even if there's a slight uptick in demand. And if they can make the chorus business profitable even by a very slight small percentage, it could make a big impact. And that's what's happened. I mean, they've cut down on a lot of losses, which is as good as making money. So on a cash flow basis, they've definitely been positive. And Tata Steel, but I think 280, 290, 300 probably is a neighborhood where it would consolidate. That's a fair value according to its current level of operations. So I wouldn't make people expect the same kind of return for the next 15 days. And there could probably be some profit booking also, which could see it move down a bit. But that's a broad range.
Where do you see it going?
It should be a very good outperformer of sorts. We have it in our core portfolio all the while, and Tata Steel is something that is one of the best run steel businesses in the world, not just India. So hold on to it, but don't expect returns of the last 15 days in the next 15 days.
Time for us to take a very quick break. When we come back, we'll review Prakash's own portfolio, which he designed for this show. We'll also talk a little more about the banking sector. Don't go anywhere. Welcome back. You're watching All About Stocks on ET Now. Thank you so much for staying with us. Prakash Devan is still with us in the studio, helping us figure out these turbulent markets and still find a way to make money. Well, it's time for us to look at Prakash's own portfolio. Now, for those of you who are regular viewers of this show, Prakash designed a portfolio for us in November last year. We've been tracking that portfolio very carefully. Now, given where the markets are, this portfolio is currently at a loss of 13%. The Nifty, over that same period, is down about 7.5% nearly. So it is underperforming the Nifty. I'm going to give you a list of the stocks in this portfolio. There's Oriental Bank of Commerce, Tata Steel, we just talked about it. There's Mahindra Satyam, which is now Tech Mahindra because of that merger that happened on the 4th of July and the share swap of 2 to 17. Kane, Cipla, Coal India, IGC and M&M. Well, Prakash, let's talk about this portfolio. You mentioned a lot of these stocks a little earlier on the show. So I want to understand that you still stand by that entire list. Do you want to make any changes there?
No, I don't think so. I mean, markets have been turbulent, as you rightly mentioned. Also, we've seen the economy take the brunt of a slowdown of sorts. But I would still stick with a well-balanced portfolio like this. It represents all the good sectors, all the core sectors. And it's unfortunate some of the stocks have been sold out a bit too much, but they'll definitely bounce back.
Let's also talk about Oriental Bank of Commerce. It's down nearly 60% since you bought it on this portfolio. Does that cause you concern? Because there are a lot of other banking stocks that have not fallen this much.
Yeah, I mean, maybe, banking has been one of the most, as I said, it's been a victim of these regulatory issues and intervention that hasn't done well, that haven't gone the right way. And when we picked up last November, if you remember, post Mr. Chidambaram's accession as the finance minister, things were in a roll, and the momentum in the banking and the entire vertical was so strong. So we probably caught some of these banks strong. Of course, I remember OBC was the second switch that we made after ING was out, and that was at a fair momentum kind of a phase of the market. So you do end up at times making that kind of a judgment, but I would still believe for a long-term portfolio it pays off, and very soon you could probably see Oriental Bank of Commerce do very well going forward.
Well, the interesting thing is that for most of our viewers right now, any portfolio will possibly be showing a loss, given where the market is. Now, when I'm looking at my portfolio at home, it's very easy to get disheartened to think that, oh, this market's not going anywhere. But if I am a long-term investor, how should I appraise my portfolio? How should I look at it and judge whether the performance is good or bad? Or would you say that right now don't look at it at all? What's your advice?
If you go back to the basic premise of creating this portfolio, it was for somebody who was starting off to invest with just 10,000 rupees, and that's why the number of shares, if you see, are very nominal. The best part is anybody who starts off at 10,000, I would believe would add more money or would be in a position to add more money. And times like what we saw on Thursday and Friday before that actually were ideal to actually add up. I mean, stick to the same stocks as long as nothing's gone wrong with them fundamentally, but keep on adding at lower levels if you have the money. And that's exactly why a disciplined approach to investing will always deliver returns. And don't get disheartened with these moves because it's not even a year. And equities, we talk about much longer periods.
So if we actually look through the news over the last 2 weeks and find nothing specifically negative about our own stocks, that's a good sign, right?
Absolutely. So if nothing's gone wrong with the management or with the business model or with the particular market that a company addresses, Coal India would probably be the only one which has had a lot of negative news flow and we've still stuck to it because it's a behemoth, it's a monopoly, it could do well. But otherwise, if you look at, none of these stocks have been under any kind of a cloud of sorts.
All right, so that's interesting. You can use that to appraise your portfolio back home as well. Go through the news over the last couple of weeks on the internet. If there's nothing specifically negative about the stock you're holding in your portfolio, then it's possibly just falling in line with the market. And if you're a long-term investor, like Prakash said, this is a test of your faith. Hang in there. I'm going to give you a recap of Prakash's portfolio before we move on. Oriental Bank of Commerce, Tata Steel, Tech Mahindra, Kane, Cipla, Coal India, ITC, and M&M. If you have any questions for Prakash, remember you can write to us. Email ID is at the bottom of your screen. We have time for a few more questions, and that's on the banking sector. Ajit has written in 95 shares of ICICI Bank bought at 1,080 rupees. Should he hold on to it? Now ICICI Bank ended the week at 853. It's hiked its base rate about 25 basis points to 10%. This again has been done by a lot of the banks in the market right now. The stock is very close to its 3-month low. What's your call on ICICI Bank? I know you used to be really positive on it a little earlier in the year. Are you still positive?
I still am, yeah. Okay. And if the question is hold or sell, but if there were another option to average, I would have definitely favored that because ICICI also has done extremely well in its earnings. If you see, it's been one of the most well-run banks of this size. I see no complaints, and these are levels to buy in.
Okay, so these are levels to buy in. Hold on to ICICI Bank, and if you would like to, average out. Kaushik has written in 500 shares of IDBI, bought at 118 rupees. He wants to know if he should hold on to it. That stock ended the week at 58. IDBI Bank also raised its deposit rate up by 1.5% this week. IDBI Bank?
IDBI is not one of the top-notch banks in terms of growth and quality both. So if you look at the kind of alternative options which are available, they're far more better options. So I would still want to move out and put my money into something that goes up faster, like maybe an OBC or a syndicate bank amongst the smaller ones, and ICICI, of course, on the larger side.
All right. Now, the next question actually will give us some faith. Raghavendra has written in. He wants to buy in this market. Choose between BHEL and BEML shares at the current market price. Investment horizon is 3 to 5 years. What should he buy? Those two stocks on your screen right now. Nice to hear somebody wants to buy in this market. Which one would you recommend?
If the choice is out of these two, it's BEML at this point in time because very clearly that's into a business that's very well diversified, earth-moving equipment is always going to be in demand, be whatever shape of economy you are in. But BHEL has its competitive pressures, which could kind of, make it difficult to grow as fast as it has grown in the last so many years.
Alright, it's time for us to take a very quick break. When we come back, we're going to discuss GMDC, K in India, and SBI. Don't go anywhere. Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. Prakash Devan is still with us, helping us plan our investments in these difficult times. Well, Prakash, it's time to look at your report card. You recommended GMDC, the Gujarat Mineral Development Corporation, when it was trading at 170 in September 2011 on this show. The time horizon of 2 years. I remember it hit a target, and then you gave us a fresh target on it. But that stock is currently at 86 rupees. For those of our viewers who are holding the stock, on your advice, what would you recommend they do now?
Again, this is a stock that's been a victim of the systemic issues that we see with this entire sector as a whole. I mean, you look at Sesa Goa, you look at this, you look at MMTC. So I would reckon there's nothing wrong with the company, the way the business is run, but except the environment is not as favorable. To wait for certain changes to be made, the government would need to take a positive step towards, liberalizing their business. And once that happens, it could probably, like a spring move back to those zones. So hold on, have faith, there's still some time.
Alright, it's time for us to look at one of our viewers' portfolios. Narayan has sent us his entire list of stocks. He tells us, Prakash, that he's a long-term investor and he wants us to help him decide which of these shares he should hold on to and which he should sell. 2,000 shares of K in India, right on top. Got it at 309 rupees. We know that the company is going to benefit from the rupees fall, but and it's also part of your portfolio. Should he hold on to K in India?
That's a stock I also like, and it has some very unique strengths to back it up. So, and I don't think he's bought it at very high levels and needs to get worried about. Definitely will make some money if he holds on.
Over the long term, what can he expect from K in India?
If things go the way they're planned, it should be about 430, 435 very soon. And that's what we've been hearing about and anticipating. But every time there's a regulatory hurdle that probably stops the company from expanding, in terms of its capacities, which at its peak would be about 250 lakh barrels per day. At this point, I think it's at about 55-60% of that capacity. So automatically the earnings, and in case of cane, it's correlated directly with crude prices. So if crude does well, which it would if US does well and the rest of the Europe does well. So, you're looking at the commodity basket to start firming up the way metals. Metals are usually the first to do well. And it's followed by the other ones subsequently. So I expect crude to harden quite a bit in the next 6-8 months, and cane will benefit out of that.
Alright, he also has 100 shares of SBI, which he bought at 1823. Now, SBI is a stock that used to be a favorite that's taken such a beating, of course, along with that entire PSU banking pack.
Yeah.
But should we treat SBI differently from the rest of the PSU banking stocks?
Yeah, I mean, if things go wrong with the PSU banks, SBI would have the maximum amount of things going wrong. So that's how you could treat it differently. And it has got quite a bit of cloud over its head. So I don't think it's going to be very easy for SBI to come out of it in a hurry. The private sector banks could probably do it faster. And when I say that, it's ICICI, HDFC, Kotak, in that order.
So he has one last stock on his list, 500 shares of Tata Global Beverages, bought at 160 rupees. That stock ended the week at 146. Now, that's a company with great promise, given the tie-up also with Starbucks at this point, which is rolling out fairly quickly in all of our metros. What's your call on Tata Global Beverages?
So it's a definite buy or a hold if he has to continue holding this. I'm sure it will pay off. It's a company which is moving more towards global standards of not only operations but corporate governance as well. And the earnings profile the quality of earnings is extremely robust. And I don't see that getting affected with the slowdown, that people will continue to have coffee even if things don't go well on the current account deficit. So that's a fairly insulated defensive stock he's got in his portfolio. He should stick to it.
Alright, stick to it. Unfortunately, we've run out of time on this show. You can, of course, send in your questions to the email ID that's at the bottom of your screen. You'll find a copy of this show on our Facebook page as well, and you can reach me personally on Twitter. Prakash, thank you so much for spending time with us this week. If you have questions for Prakash, of course, reach us at any point. Thanks for watching All About Stocks. Keep the faith.